Bauer, we do see markets in the red for the month of March, last day of the quarter, last day of the month, but we certainly have had a better week. I mean, if you're talking specifically about how the markets are responding, let's spin it forward to the second quarter. Would you be investing here ahead of the second quarter?
Liz, I think that's really tough. People are feeling better than we were, a week, 2, 3 weeks ago, but there's certainly a massive amount of uncertainty abounding, between inflation risk running high and the inverted yield curve, obviously the ongoing conflict in Ukraine. All of those do not paint the most bullish backdrop for, the second quarter coming up. And the immediate threat, as you and Phil were just talking about, is high energy prices, rising food prices, and the supply chains are still disrupted. They're not really getting that much better. Now, you take all of that and you look at consumer confidence. Consumer confidence, this was the worst number that we got in about a decade, but yet people are still spending. It's unbelievable how resilient the consumer is and how the economy is right now. That being said, Liz, I think the second quarter is going to be as rocky, if not more so, than the first one, especially as we move closer and closer to that next Fed meeting and more uncertainty, comes into the marketplace, 25 points, 50 basis point hike, whatever that is. Going beyond that, by the end of the year, I think we're higher. The next quarter, though, I think we're in for some rocky road.
Okay, Scott, we got to go. Give me a quick couple of names.
I still want to be long financials, JP Morgan, Citibank, maybe a Goldman Sachs. And it's also, Liz, it's a great time to buy protection because volatility is down so much from where we have been over the last 4-8 weeks or so.